Nearly all the stocks that got crushed when interest rates were rising can spring back now that rates are coming down. Not just long rates. The Fed might even take down short rates repeatedly next year based on what we heard today. In this environment, you want some exposure to the real estate investment trust. That's right, REITs, which have already started rebounding like crazy since long rates peaked in late October. Take Cramer fave Prologis, the REIT that owns warehouses and other logistics facilities, which put up great numbers in its most recent quarter and has already rallied nearly 34% from its lows in late October. Today, Prologis spoke to investors and analysts at the New York Stock Exchange, I'm familiar with that area, to present the longer-term investment case for their stock, rolling out some very encouraging 3-year financial targets. Clearly, people like what they heard, hence why the stock jumped nearly 6% today. Now, earlier, we got a chance to speak with Hamid Moghadam. He is the co-founder, chairman, and CEO of Prologis. Take a look at this. I mean, you have what I consider to be a joyous investment day because you're really talking about how to dominate. Why are you the most dominant company in your sector?
Well, we really don't want to be the dominant company. We just want to be really good at serving our customers. And I think the customers are the key. Real estate companies are about the next deal. And we pretty quickly figured out that when you are our size with about $200 billion of assets, the next deal, no matter how good it is, not going to move the needle. But if you put the customer at the center of your business and you serve them even 5% better, you can create tons of value. And, you know, unfortunately, the real estate industry wasn't built around customers. In fact, it was an adversarial relationship between landlord and customer. And we've turned that equation around. And I think that's our secret sauce, more than our investments or our buildings or anything like that.
Well, I'm so glad you mentioned the customer because you would not have unbelievably good companies like Amazon, Home Depot, and FedEx if you were working with you directly. And I will go so far as to posit that when I get something that I order in the morning and it's there in the evening, Prologis is playing a role in that.
Well, you know, 3% of global GDP goes through our buildings. And so the chances are, and in the U.S., that number is much bigger. So the chances are that your package is coming through a facility of Prologis at some point in its life.
Now, when I first met you, big domestic company, but now, I mean, you're capable of talking. I mean, at one point in your meeting, you said, well, you know, Poland's a little weak. I mean, you're in a lot of places.
We are. We're in 20 different countries on 4 continents. And those countries represent a little over 70% of global GDP.
I often look at your stock and say, you know what, I know it's a real estate investment trust. I regard it as a growth vehicle that pays a pretty good distribution. Correct way to look at your company?
I think so. I think the biggest curse in our company is the fact that we're called a REIT. And so we're almost bound by trading like a REIT. And most people think of us as a fixed income substitute. We are absolutely growth stock. I mean, you know, we've been growing double digits for as long as I remember, both in terms of earnings and dividends. And that picture is going to continue in the future based on everything we've seen. We got a huge mark to market between where our leases are and where market rents are today. We're not talking any further growth. There will be further growth in market rents. But even if there is no further growth and we just capture that spread, it's a shoo-in for really strong earnings growth.
Well, let's talk about that. I find the analysts periodically they want to nitpick, I think, because they'll talk about occupancy, 97%. They'll talk, I mean, the utilization rates. These are extraordinary rates. And when they do say that maybe things are a little soft, you point out that there's very little new construction in your business.
Well, actually, there is a fair amount of construction this year. It's a blip.
Right.
But if you look forward, starts that are down 65%.
That's stark.
And we're at 4% vacancy. I think we'll get up to about 5%, and we'll go right back down to 4% because of this slowdown in construction. And by the way, we have gotten spoiled because vacancy rates were in the 3.5% to 4% range in the last 2 to 3 years. I've been doing this for 40 years. They have never been under 5%, other than this cycle. So we're talking about historically low levels of vacancy and historically high levels of rental growth. But even if you throw all of that out, just capturing the rent growth that's already occurred, it's a tremendous boost to earnings.
When you buy a company like Duke, I think this is my view, but you tell me, you're able to convert that into a much more customer-centric operation and then take share or please the people, and numbers go higher.
So that's the playbook. The playbook is that we usually pay a premium. Love not to have to pay a premium, but we have to pay a premium to buy the company. We generally get that premium back with cost synergies, and we've gotten pretty good at getting those. A lot of companies talk about synergies, but if you really look at it, they don't get it. We've proven that we get it time after time after time. We've done 3 or 4 public company M&As the last couple of years. So the track record there is pretty good. But that's not the big price. The big price is what other services and products we can sell on top of real estate to the new customers that we get by virtue of these relationships. Whether it's solar energy, whether it's storage solution, whether it's EV charging, whether it's operating essentials, all these other things, whether it's private capital management of some of those assets, all of these are different income streams that very few real estate companies have.
Well, I do. I feel like I'm leaving out superlatives here. 5 billion square feet. How about 500 megawatts of rooftop solar? Clearly the largest there is.
It's the largest rooftop, not industrial scale in farms, but largest rooftop. We were second to Target. I think we just passed them. And we'll keep going. I think that we're just scratching the surface. That's only 4% of our roofs. Wow. We got the other 96 to go. So by the time we're done with this, if we're ever done with this, this will be a utility scale provider of renewable energy. And we're putting a lot of people and resources into growing that business. By the way, we're not 5 million square feet. We're 1.2 billion square feet.
Well, one last question. You have what I consider to be a consumption model. You're exactly where you need to be for an Amazon. It's convenient, and those are now hard places to get, right? I mean, you've got a hammerlock on a lot of the real estate.
So it's really interesting. I mean, this business is not rocket science. Where is consumption? It's where people are. Do people move around all the time? No. Population trends don't change that much. So if you've got a position in LA or in New Jersey or in New York and all that, you're serving those people, and they don't make any more of that real estate. So,
well, I want to congratulate you on everything. And I remember during the dark days of 2008, you were the first stock that bottomed because your business was unaffected because you have such strong controls and balance sheet. A lot of people have too big eyes. You never did. You've really run your capital correctly. Hamid Moghadam is this Prologis chairman and CEO on his fabulous Analyst Day. Nice yield, great growth.
Thank you, Jim.